Okay, moving on to our next story. The next story we are going to break down, hopefully in like 10 or 15 minutes, the Wall Street's bets situation. If you clicked on this video, you should watch this till the end if you don't know what happened. And you may know some headlines and stuff of what happened, but we are actually going to break down what happened. Like what the hell happened in this scenario? And then I'm going to give my perspective and sort of my take on how I think this is ultimately going to democratize the stock market, which is like the best thing in my opinion for what is going on. So let's talk about it. Wall Street Bets. Basically, it's this forum on Reddit, right? And if you guys don't know what Reddit is, it's this online community. It was started like 10, 15 years ago that has little mini niche sub communities on it. Think of like going to like the mall and you see all these different stores selling all this different stuff. Reddit to me is just like a mall, like a huge mall in your local community, but it has a ton of sub communities in it. And you have stores that are selling clothes. You have stores that are selling, technology products. You have stores that are selling food. Reddit is a digital mall in which people are conversing and communicating about a variety of different topics that obviously interest them. There's a forum on Reddit called Wall Street Bets, and basically that forum was created as a way for us, for average people to come together and all collectively find good stocks to invest in. And I'm going to do a future episode breaking down the stock market in its core, so anyone who doesn't know about the stock market could like have a better understanding of what it is. But that was the purpose of Wall Street Bets. GameStop was a stock that was heavily shorted. What is GameStop? GameStop is a company that people bought games in, and it was doing really bad. Its price got to like $6, $7 only like a year ago, back in the end of 2020 or early 2020, because people were recognizing that we don't buy games at GameStop anymore, right? People get their consoles and their games from Amazon or Walmart or Target or like these types of retailers. GameStop is like, they have some standalone stores, but really they're usually located in like malls and stuff, and people don't go to malls anymore. So GameStop was just not a company that was innovating. They didn't have a subscription service. They didn't build an entire community around gaming, kind of like Twitch streaming has done. So they really didn't have any community around the stock or any like future potential that the stock would do remarkably well. So hedge funds decided that they were going to short the stock. What is shorting a stock? In its most basic terms, when you short a stock, you are borrowing shares that you don't own for a certain price, and you are betting that those shares go down in value, so that when you buy the shares that you borrowed or return them, there will be a difference between the price you borrowed them for and the price that the stock ultimately fell to. And the bet is if the price goes lower, then you will make a difference in the profit. You will make a profit in the difference between the two prices. So hopefully that explains it decently well. That means that the price of GameStop going further and further below, ultimately until it's bankrupt, would be the most phenomenal thing for hedge funds who are shorting the stock. What is a hedge fund? A hedge fund is basically a conglomerate of institutional investors in one place that have raised capital, that are managing capital from institutional clients, from very, very high net worth clients, and they're allocating that capital to certain places in order for them to receive a return, and that return is where they're going to give back to their investors, to their clients, and they take some fees and management fees that are at the tunes of millions from those investments. Hedge funds make money off playing with money, right? So it's literally like they really don't, do anything of value. I mean, a hedge fund does pretty much nothing of value, like for society. All they do is like they play with money, right? That's their goal. And I'm not saying like they're totally worthless, but like at the end of the day, they're not creating new things. They're not really investing in a lot of people. They're just literally hedging and playing with money and seeing if it can go up or down. They make money if the GameStop stock goes down, if they short it. So they put a lot of money into shorting it, and at the tune of billions. Like if I make $1 billion bet that this goes down and I make $2 billion off it going down, then that's high risk, high reward type of bet. A bunch of people on Wall Street, bets, not actual Wall Street, on Reddit, recognized that this was a trend that was happening, right? So they came together, and this is where the sort of democratization of Wall Street sort of came into this one forum at the tunes of millions of users are like, yo, these hedge funds are shorting the stock. If we all buy the stock, which means more and more people are showing interest for the stock and they're actually purchasing shares of the stock of GameStop, the price is going to go up because it's basic supply and demand. When there's more demand for a certain amount of supply because millions and millions of people want the stock or the product, whatever it may be, the price inevitably goes up because there's a limited amount of supply, which means more and more people showing interest for a company or a product ultimately boost the stock price to go up. So there was just not enough attention for the GameStop stock. Like it just wasn't interesting enough. And people recognized that if we come together and we join our forces and actually do what we need to do, then they could make a lot of noise. People at the tunes of millions of users started buying the stock. And that made the stock price go from like $20 to I think it was at a high of 443, which is absolutely insane, right? That is a phenomenal increase. Now, the problem with this is that whatever goes up must come down. It is very hard when you are a random company that's not doing anything innovative and barely making any money to sustain a $443 price valuation when you should be valued probably at $10 or $15. So what happened is people came together. They tried to stick it to the hedge funds. They ultimately got away with it because a couple of hedge funds closed out their position and took $1 billion loss. But a lot of hedge funds just continued to do what they were doing, and they ended up making money regardless. Why? Because the stock price ultimately came back down. When a stock price goes up and it's at that rate, unless everyone holds the line, and this is a term you guys may have been seeing over social media, it's called HODL, or hold the line, right? Do not sell. Then the price is going to go down. If you start selling a share of your stock or selling shares of your stock, the price goes down because the value of the stock is simply not that valuable anymore because you have been selling shares of the stock. So at that point, it's really important to recognize that so many people at a $400 price were selling because, like, why not? It's $400. It was $20. They were taking their profits, which kind of ruined the entire movement in and of itself. And that's what led the stock price to come down. Today, I think it's like $60 or something like that. Let's actually see what GameStop stock's price is. GameStop stock. It is at $48. Okay. So it went to a high of 483, and now it's at 48. And that's just a really sad thing, right? Because this company should be valued appropriately, but obviously it fell down when people started selling the stock. There's a couple of unique takes on this. Now, there's the whole Robinhood controversy with Robinhood banning the sale or the purchase of the stock. I'm not really going to get into that because I think there's been a lot said about that. But essentially, Robinhood is this democratized platform that has allowed people to start purchasing shares of stock and investing in the stock market without commissions. And I want to give a lot of credit to Robinhood because Robinhood did a really good thing by getting the millennial community, people like me who knew nothing about stock markets or nothing about investing, to recognize that if we put a couple of $100 away every month into certain shares of companies, we can make a return, right? Like there is a chance that we can make legitimate returns on our money and that it can actually improve the quality of our life. So Robinhood did a great thing of just creating the brand that allowed people to buy more into what the stock market is. The problem is that they also did not allow people to buy the stock a day before it was at its highest peak. And if there was more buying, GameStop might have gone from like $480 to like maybe $700, right? I'm not going to get into that too much. There was a lot of reasons. There really isn't a lot of conspiracy reasons that people are talking about, like, oh, they're in bed with the hedge funds. That might be the case, but because hedge funds are Robinhood's customers, and I'll do another video in the future for why Robinhood is like how their business model operates. They don't make money off consumers. They make money off the data from consumers and sell it to hedge funds so that hedge funds can make better trades. But essentially, Robinhood needed more capital because they didn't have enough capital to allocate to clearinghouses, which are people who execute the trades of their users. And when you make a trade, it takes 2 days for that trade to go through. So someone has to put up the capital required to execute the actual trade. And there was not enough money in the system to execute the amount of volatility and money that was being put into the GameStop and AMC as well, that company that was going up, trades that were being conducted on Robinhood. So Robinhood had to close it down. Regardless of what Robinhood had to do, the stock price has now fallen down. Some hedge funds lost, most hedge funds didn't, and some retail investors probably made some good money from buying GameStop at like maybe $100 and then they sold it at $400. The real thing here, though, and this is really my take, is that I think that the stock market has started to become more democratized to people. And what I mean by that is I have been interested in stocks for a very, very long time. I mean, I started getting into stocks back in 2018. I knew nothing about them. 2019, I finally got a Robinhood account. I started buying certain stocks. I started feeling what it feels like to own a share of a company, right? And then in 2020, I lost a lot of money on stocks, and that was my experimental phase. And I think everyone has to go through that experimental phase. If you're saying that you're not going to do it, like, it's impossible. You're going to lose money on stocks because you know nothing about patience, you know nothing about the fundamental metrics, you know nothing about how news affects stocks, all of that type of stuff, right? 2021, I think I'm in a much better position to just understand how to make better investments. So I've had about 3 years of just going through this process of understanding the stock market. I think it takes an average of like at least 3 to 5 years to really understand the stock market. And then when you're in your 5th year, you're going to hopefully make trades and you'll have enough capital saved up to allocate to make conservative yet risky decisions in the market that will actually make a return. Most people go their entire lives and don't know what the stock market is. And a good example is my parents, right? My parents have been in America since like 1992. 1998. They got married in 1992. And just this year, I taught them about the stock market. And now they pay attention more to it than me. My mom actually made $1,000 off AMC because she was swing trading it. And I was just, when she told me she invested it at $16, I was like, that's risky. And then she sold it at 18 and now it's at like $7. So the point is she's been taking those risks, right? She's been learning a lot about it. And my parents in 2010, if they had just put $100 every month into Tesla or Amazon or Facebook, that money would be worth thousands today, you know? And it's just crazy because that means there was 10 years of no financial returns outside of a salary, which could have been a lot more money today and helped out in a lot of things. And that to me is the beauty of the stock market. The beauty of a company going public is that you can own part of Facebook. Like whether it's 0.00001%, you own a part of the company, and them doing well is not just good now for them and their revenues or just for the product or service they provide you. It's financially and economically proportionately valuable to you, which is just like blows my mind about how the stock market operates. That you could put money into a company and you don't have to do anything. You just have to make a good decision with the investment, and the company has to do all the work and you can get a return. So I think that's a beautiful thing about the stock market. Most people taking their money and buying just random nonsense with it, if they just invested in the stock market, could have exponential returns if you give it enough time. And that leads to a more financially literate generation. Why is that good? Because people being more financially literate means that less people have to deal with not having money. Like legitimately not having enough money to be able to do things that they need to do, even if it's just pay an extra couple $100s for rent every month. So I see the stock market as a amazing tool for people to benefit from. And what this Wall Street Bets situation has done to me, based upon all the memes and all the pop culture and social media stuff that's been referenced to this situation, and it's had a good narrative around it, right? Little guy beats the big guy. So that was an appealing narrative to get people's attention. To me, it's led to people downloading Robinhood, which is good. Yeah, Robinhood's not the best brokerage, whatever, but the fact that this like app exists that's as easy to use as like Instagram when it comes to buying stocks, yeah, you can say there's some negative consequences to that, but overall, I think it's net positive because that gets our generation, people who need to be stimulated via likes and all that stuff, to feel engaged in investing, which is a primarily boring thing. Why is it boring? Because unless you know the price to earnings ratio, unless you know the fundamentals of the company, unless you know, and you watch interviews with the CEOs and all that boring stuff, which I don't find boring, but to masses it is boring, then you're not going to be an adequate and strong investor. And just having the app on your phone and at least playing around with it and like going to these different sections and looking at stock prices and looking at the 5-year trend, that stuff starts to get you interested in the stock market, which is to me a net good for everyone. Because if there's more and more money in the stock market, not only is that good for majority of Americans who haven't invested in the stock market or majority of people, but that's also good for stocks because now businesses have more money. They could pay more money to their employees. They could make more capital investments in different products and services that help everyone's lives. They can innovate more. It is just a net good for humanity if more and more people put their money into the stock market. There's also less chance of the stock market crashing at that point because there's so much capital that's invested in these places that less companies have to worry about going out of business. Now, obviously, the stock markets could crash based on like global and financial sectors that are out of the concern, but more and more people having their money is a safer bet than putting your money into like random stuff or putting it into a savings account that's barely paying you any interest. So overall, I think Wall Street Bets has done an amazing job at democratizing the idea of stock market investing. And I think they should keep doing it. And I think people should keep learning about it, because I'm not an expert on the stock market, but I love learning about it more every day. Like it's an exciting challenge, and it's a challenge that is so easy to be able to be updated on that it shouldn't be a mystery to that many people. Like there are people who don't know what a share price is of a stock. And to me, that blows my mind, because everyone should, in the world, because we operate in a globalized society where business and economies run everything, you've got to know this stuff. Like this is the stuff they don't teach in school for God knows what reason, but this is the stuff that matters. So shout out to Wall Street Bets, and hopefully this bet takes off and more people invest in the stock market.